Out to be a good day of trade. It's turning out to be a good day of trade again in context of where we were same time, let's say 2 weeks ago, and where we are. It's nice and steady, both for the market breadth and again for the primary indices. But it is pacey and perhaps it is solid when it comes to Mahindra and Mahindra's quarterly might to demonstrate the capability of the company and the ability of really scaling up when it comes to across the board all their portfolio. So the man of the moment, Dr. Anish Shah, joins us in our studio, and thank you very much for joining us. 4 quarters now, margins are above 14%, and this is way above what you indicated to the markets and to us. You've been conservative with your guidance, you've been consistently beating your own guidance. So are you looking at more such consistency that you'll under-deliver and under-commit and over-deliver?
So Nikunj, let me start by what we said last year, which is that SUVs will grow mid to high teens. Yeah. At the time we said it, almost everyone was looking at us saying, it's too aggressive, you're not going to make this happen.
You never made this comment in ET Now today. You would have never made this comment.
No, this was done publicly at the analyst meeting, right? With all our analysts there. And
that's why journalists are better than analysts.
And that may be the case, yes, but and we've got to 20%. So we have always been very bold in our targets, and thankfully we've been able to come out ahead of them. A lot of credit to our teams. They've executed really well. In some cases in a tough environment, in some cases with a bold target, in some cases with both. And what we see is results across the board from all our companies.
Where you stand now is that you've got a formidable market share in the SUV market, 20% plus, and it is only inching higher. SUV now account for nearly 50% of the total car sales on Indian roads. Now, when a category reaches 50% plus, it can run the risk of stagnating. When an individual company reaches a market share of 20 to 25%, it again reaches the peak of risk of peaking out. Is that a valid risk for the SUV business of Mahindra and Mahindra, that you've grown too fast and too quickly?
So here are the facts. Our SUV revenue market share is 22.5%. Yeah. Our LCV market share is 51.9%. Our tractor market share is 43.4%. Our electric three-wheeler market share is around 44%. So at 22.5, I think we still have some room to go.
Okay, that means you will be able to grow higher than the auto sector, and you will continue to gain market share, because the 22% what you have is all acquired market share. It's something which was not there, and you acquired everything. So as you need to gain more market share, would you be doing that because of pricing, performance, new launches, or it would be some technical capabilities?
So it's with products, customer value, customer service experience, and being able to execute well. It's a combination of all of these things. We've gained market share even when our share has been high. In tractors over the last few years, we've gone from high 30s to mid 40s. In LCVs, we've gone from, again, high 30s and low 40s to low 50s now. So for us, it's going to be really around execution and delivery of value. We don't believe in cutting prices to gain market share. We believe that the customer has to get an overall value that they are delighted by. And that's what has driven success for us in our SUVs, because we've grown significantly in SUVs in particular, but that's on the back of the products that we have.
But how do you translate that, Mr. Shah? Is it going to be newer products, more affordable? Because when the SUV trend began, it was when we were coming out of COVID, right? Everyone wanted to be safe. There was that wealth effect because of the stock markets. It was that entire feeling of do whatever it takes to feel safe. Yeah, YOLO as well. So you didn't mind spending on a big SUV. You wanted to travel comfortably, safely with your family. All that has sort of waned off, and so has the wealth effect maybe. So how do you try and mitigate that?
If you're a Mahindra shareholder, the wealth effect is there.
Sorry, what's that?
If you're a Mahindra shareholder, there's a lot of wealth effect.
Of course it is.
Yes, I think that's a good suggestion, right? You get the wealth effect on the Mahindra shares and buy an SUV after that.
No, but So my point is, I mean, how is it that you penetrate further than this 22.5% in your SUV segment? Is it going to be more affordability, newer products? How do you create more value there?
So we still have a backlog for some of our products, and the reason we've gotten to this level is unique products that are outstanding from a quality standpoint and deliver a very good value to the customer. It's a combination of all of these things. Customers give us the feedback that they love our products, and that's really what's driving this share at this point. And for us, therefore, it's continuing with the set of products we have, introducing new products as well. Our EVs still have to play out. We've just launched them, and we've seen some very strong customer feedback. We've got a backlog on that as well, and we're continuing to expand capacity. So that gives us, the customer feedback gives us a confidence today.
Sure. What about LCVs? Because that's where I see the big jump has come, right? Your market share is almost hitting 52%, and that's a 29 bips of an addition that you've made in the quarter. What's the plan there going forward?
Again, keep our head down, execute well, continue to deliver strong products to the customer. That's the standard mantra across our product set right now.
Right. Let's talk about your BEVs that we spoke about, and you did say that you're seeing a good customer reaction as well, feedback as well on that particular front. In the initial round, you received an advance booking of around 3,000 units or so. What's the status of that right now? Are you seeing some more increased demand? You said there's backlog as well for that.
There is, and we continue to see an increase in demand on that front. Customers who have taken a test drive come back very energized, and I've seen a lot of customers just take a test drive and buy immediately on the spot. It's a very different vehicle. The kind of quality, the kind of features we have in that vehicle, from a technology perspective, a ride, handling, all of those aspects, have got some rave reviews from customers. After driving that car, I would find it difficult to drive any other vehicle as well. So that's one that we are seeing playing out now. And we have a number of other electric vehicles also coming up over the next 12 to 18 months. So that's going to expand the EV portfolio and continue to give us an edge in the marketplace.
Okay, now I'm going to take a pause here, remind our viewers, we're discussing Mahindra and Mahindra. Now, Mahindra and Mahindra is the holding company for all the group businesses, and time and again we've said it that now the auto business is less than 50%. We should remind viewers every time that, look, we are discussing Mahindra and the first 5 questions are on auto. Next 5, nothing on auto, I can promise you.
That is great to hear, because auto is always a very exciting business and therefore takes up all the airtime. But you're right, there is a lot more beyond auto.
So as percentage of the total business, and we are talking about Q4 numbers, so you can give us the full year number also, which is for FY25. When you started the year, how much was service and how much was auto?
So if you look at it, Nikunj, over a longer period, right? Typically, it's 1/3 auto, which is SUVs, LCVs, 1/3 tractors, and 1/3 what we call services. So that's how we look at it. At particular points in time, it may change a little. For a certain period, tractors was close to 40%. Today, auto is closer to 40%. And with both Mahindra Finance and TechM coming up strongly, I expect that segment to go much higher in the years to come.
So as this migration happens, where the services businesses will become big. Mahindra Finance, we are discussing the numbers, quarterly PAT 2,000 crore plus, which is equivalent to what Mahindra's total PAT is, as in the listed, as in the holding company. There is definitely a big change which clearly is happening in Tech Mahindra. Still work in progress, but change is happening there. Mahindra Real Estate or Realty, Life Sciences, that's also, you know, firing full cylinders. As this migration moves away from autos to other service businesses, will the net number change for you on the margin front?
I think our approach is to make sure that all businesses are contributing, and not just the 4 large businesses we have today, but the growth gems. And in our presentation today to the media, we outlined scalable growth gems and emerging growth gems with a target for them. So scalable growth gems are companies that we expect to hit $2 to $3 billion of valuation in the next 5 years. And emerging growth gems, $1 billion, which is consistent with what we've said before. And what we've seen is fairly significant growth already in some of these businesses. Electric 3-wheelers has gone from 14,000 units per year to 78,000 in the last 5 years. And we're now looking at a 2 to 3x growth beyond that. Our life spaces business used to have 670 crores of pre-sales. It's now 2,800 crores. So literally 4x in the last 5 years. And this is a business, being a listed entity, has publicly talked about getting to 9,500 crores, which we are rounding up to 10 in the spirit of having higher targets, in the next 5 years. So that business will effectively have grown 14 times. And just beyond those numbers, the focus on profitability, focus on the customer is extremely high.
That is mark of confidence. 500 crore pe diya. That is mark of confidence. That okay, 9,500. Let's make it look good. We'll
Round it off.
definitely round it off with 10,000 crore. That's mark of confidence.
Yes, and more importantly, what's required for pre-sales over the next 5 years, 70 to 80% of land has already been acquired. So it's execution at this point in time.
Just one.
But tell me, Mahindra Group has always had a legacy of innovation. What are the new spaces that you're looking at venturing into or incubating? I mean, there's so much happening in the world, right, in terms of disruption around AI, new technologies, automation. Could you give us some color?
So we are using all of that to do what we're doing much better. So specifically to talk about AI, we're using AI very significantly in manufacturing today. And there are multiple areas that we look at. One that we call uptime.ai, which is ensuring that our manufacturing plants are up and running a lot more. With AI, we've been able to cut down 15% time in any downtime that takes place. We're looking at what we call productivity.ai. So welding, for example, is typically a process which is a destructive process when you test it. And with AI, we can get to much better welding with much better quality as well. And therefore, it's both, again, quality.ai and productivity.ai that comes in together. Energy.ai is another area, and we're looking at significant savings in terms of how we use energy, how we use connected plants, digital twins. So technology is a big part of what we do and everything we do. And our goal is to be tech leaders in every business that we are in. And each of our leaders has to be a tech leader first, and then they can be a CEO or whatever else they will be. But technology is a key part of what we do today.
Okay, so let me remind our viewers that I look at a transition phase in Mahindra & Mahindra. When you took over, your first attempt was to fix the house, get rid of unnecessary clutter. Sangyon, a company which would have thought that Indian promoters would acquire and sell, you took that decision. Now for the first time, you made an acquisition. Now the Mahindra & Mahindra last 3 years was in the mode of consolidation. Subsidiaries, non-core businesses. Now you are in acquisition mode. So is the recent acquisition of SML is the beginning of Mahindra & Mahindra getting hungry for acquiring growth? I mean, are you getting acquisition hungry?
So we are hungry for scale.
Okay.
You're right. We started with consolidation. We pivoted to growth after that.
Yes.
And that's the phase where we drove growth across our businesses. Our organic growth across the group for the last 5 years has been 25% per year. And we feel that organic is a really good way to grow. You don't need to go and acquire something. Difficult to do, but sustainable. And now we're looking at scale. And for scale, it is continuing organic. It's continuing the use of technology in a number of things we do. It is making targeted acquisitions. SML is a very targeted acquisition. It's one that fits our business very well, allows us to grow the business, because we've got a very stringent set of criteria for acquisitions, and that has to deliver returns that are above what the industry would deliver, or the market would deliver. And therefore, we will keep a high bar for it. And our approach, therefore, is scale from organic technology, from acquisitions.
But many analysts do believe that you've been very conservative when it comes to capital allocation, but at the same time very aggressive on growth. So how is it that you plan to fund your capex going forward?
So we have accumulated a fair amount of cash, and yes, we have been prudent and disciplined. It was important to be conservative at that point in time, but at the same time now we will continue that discipline. And the results are there for us to see. We've seen our market cap go up 11 times now in the last 5 years. And therefore, something we're doing right. And we hope to continue that as we go forward.
So market cap also move forward, you're saying?
Market cap is always a function of what the market thinks we're doing. And as long as the market thinks we're doing good things, that will follow.
But in boardrooms, do you ever discuss market caps? Are they relevant?
We don't. We will focus more on what's the right thing for the business. Our approach is a long-term approach. So as we always discuss internally, we're building businesses for the next 10, 15, 20 years. And if we do that right, we'll get the right results for it.
Your growth of 25% and rule of 72, you divide 72 by 25, the business is doubling in less than 3 years. At some point in time, the base effect has to kick in. It's natural. How far are you away from that base effect? 2 years, 3 years? Because next 2-3 years, looking at the mix what you have, the growth is not granted, but it is obvious. But at some point in time, which I can't say, which you'll have to tell us and our viewers, when will the base effect kick in?
So Nikunj, the opportunity that exists for us really is a lot greater than where we are right now. We play today in 70% of India's GDP.
Okay.
But in many of those areas, we're still a small player. And what we've seen is sometimes as you do well and grow larger and you're executing very well, that creates a different set of opportunities that come up as well. So at this point in time, we're not really too worried about size and scale. I think we are still small in comparison to the opportunity, and we have a long way to go.
I think I've saved the most important questions for the last. Any guesses? Tariff. Tariff.
Holiday, logistics, yeah, we get to cover that. We will get to it.
Tariff. Okay, let's understand tariff. India does not export a lot of cars, but Mahindra exports a lot of tractors. What happens there?
So what we've seen is that our competitors will face the same challenges for tariffs as we will. And we have the ability to manufacture in the US. We in fact assemble our tractors in the US. We've done more manufacturing there in the past as well. And therefore we've got the ability to hedge and do more there if we need to. Our new set of tractors, the Oja range, has done extremely well, and we've in fact gained share in the US quite significantly over the last year or so. So we are well positioned right now. Yes, there can be some impact, but we don't really see that as a very significant impact for us right now.
That's for the tractor business. What about Tech Mahindra? I mean, IT companies are not giving guidance to us this time.
Tech Mahindra, as with all IT companies, is facing some headwinds in terms of what's happening. But again, we look at that more as temporary headwinds right now. The value addition, the value creation for those companies is significant. And that's something that's not going to go away. So yes, there may be short-term challenges in terms of companies not spending more on technology. But technology today is core for a business. It's not just about cost cutting or productivity. It's about how do you get more competitive in your industry. And that is what we are focused on.
You know, we've shamelessly done 27 minutes, but we still have some more time. So I'm going to ask one more question before Aisha and Shell take over. My next question perhaps is, everyone is of the view that India would be a beneficiary of what is happening because of tariff. Supply chains are changing. The tariff, whenever it comes, will be lower than what China is. Are you getting an initial sense or initial conversations that, look, what is happening in the world, on the margin, India will benefit, and you can seize an opportunity somewhere because of these supply changes which are happening in the world as a group, Mahindra and Mahindra?
I definitely think so. And it's not just because of tariff and because of what's happening in the world. We see a lot of positive changes in India itself. So I've been very bullish on the Indian economy. We will see some blips along the way. That's part of life. But the Indian economy is positioned very well today. A number of actions that have been taken over the last few years are going to benefit us from a overall productivity standpoint, ease of doing business perspective. The recent rate cuts will augur well from a demand standpoint, and there's greater liquidity as well. So I do feel we'll get out of the blips and continue on a very strong path going forward.
Tell me about logistics, because there's obviously some strategic thought behind getting Hemant Sikka at the helm. What's the big vision, say, for the next 5 to 7 years for this business?
Opportunity. I see a huge opportunity in logistics. And for us, therefore, what we've done is change the mindset of leadership. It's not about how large a business you run, it's about the value creation. And which is why we are taking some of our best leaders and putting them in businesses that have the maximum value. Amit Sinha for life spaces, Vinod Sahai for trucks and buses as well as aerospace and defense. We've had Manoj Bhatt go to holidays, and Hemant now coming into logistics. These are businesses that have a huge potential for value creation. And that's really the driver of having our best leaders look after these businesses.
You know, shareholders saying the best guy is Anish Shah, and the CEO.
You're as good as your team. So the credit goes entirely to the team.
Sure. Any questions?
Yeah.
I wanted to understand the fact that you did say that the Mahindra Group was in a consolidation phase, then the growth phase. Now scalability is what you're looking at. We already saw an acquisition that Mahindra has done with SML Isuzu. What about your other businesses? Are you looking at inorganic growth opportunities, especially for your scalable businesses that you have?
The first thing we do is make sure that the business is operating very well. And even before SML's been available for sale for a few years now.
Right.
And while we've had conversations as well, our business was not ready for it. What I mean by that was it has to operate at a very high level. We've got to have very strong talent in the business. And that will give us confidence that an acquisition will be able to deliver the results that we expect it to deliver. So as we look at all our other businesses, at this point it's first do very well internally, establish strong product sets, a very strong customer value proposition, growth from an organic perspective, and then if the right acquisition comes along at the right valuation, we'll do it. If not, we will grow the market ourselves.
So finally, at least before we wrap, are you thinking of incubating a new business which perhaps could be the next billion-dollar baby for you? Something like an aha moment which you already discussed or perhaps identified, because you've incubated businesses. From Mahindra Finance to Mahindra Holiday to the aerospace business to the SUV business, all these are incubated ideas looking at the 70% of Indians you touch. What is the next big idea you want?
So our approach now is scale.
Okay.
So we'd prefer not to do incubation.
Okay.
We have $10 billion babies. In fact, 6 of them are $2 and $3 billion babies now that we want to try and get to. So therefore, what we will look for is scale if we get into a new area.
Okay.
And I say because the bar is fairly high, we have a strong growth trajectory in what we're doing. At the same time, there could be a potential set of areas that could be meaningful and where we can add a lot more value. So we've outlined, as we've talked earlier, a set of criteria under which we would look at and operate. And if that criteria is met, then we will look at a new area. That criteria is scale. It's about market leading returns. It's about ability to execute and have a strong right to win.
So Mahindra and Mahindra is a happy family where all members or subsidiaries are contributing according to.
Yeah. But I want to ask, as of FY25, you're number one in SUVs, number one in LCVs, number one in tractors, number one in electric three-wheelers. At the end of FY26, what's going to get added to this list?
We'd like a number of our businesses to be added to that list. I may not say at the end of FY26.
You can extend the timeline.
I'm often accused of setting very bold targets. So we have our business leaders will set those targets, but you will see a few folks added to that list as we go on.
By end of 26, ET Now is the number one choice of channel for Mahindra and Mahindra.
That's a given. It already is.
Am I wrong?
Yes. I think
But is it going to be one of the auto businesses,
Yes.
logistics, holidays? These businesses have immense scope, right?
We have immense scope in a number of businesses we're in. You're right, logistics, holidays, both are very well placed. Real estate is very well placed also. And at this point, at least, all I can say is we want growth to be number one across all those businesses. And some have a longer way to go to catch up to their peers, but therein lies the opportunity for us as well.
Okay. Lastly, which is your favorite M&M car nowadays?
The XCV9E.
Okay, great. On that note, new car suggestion.
I am thinking of what I said. ET Now number one channel should come in Mahindra and Mahindra's book.
It's already there.
It's already there, is it? You've not seen it publicly on the press conference.
ET Now is a channel that we love, absolutely. And there are times when it has to go beyond numbers, but we absolutely love the channel.
Which is why I asked you which car are you driving nowadays,
We
right?
appreciate your relationship. Thank you for all your support. And by the way, your favorite team is coming number 2 this time in IPL. Mumbai Indians yet to become number 1. Let's see that one changes.
They shall get there as well. Yes.
Thank you very much.
Yeah.
Always a pleasure. Half an hour already done. See,
Right.
such an engaging chat.
Yes.
Let's take a break, and we've got 129 points up on the Nifty. Sensex looking good so far. It's turning out to be a decent, solid, and another day of positive gains for India.
If you like this video, then like, share and subscribe to ET Now.